And our first guest this week is joining us via satellite from Houston. Mr. William Sawyer is the CEO of Lucas Energy, listed on the American Stock Exchange, LEI. Bill, good to have you back on the program.
Thank you, Don. It's great to be back on your program again.
We know, Bill, we're very pleased to be reinitiating coverage of Lucas Energy. The company describes itself as a domestic energy company engaged in the production of oil and gas in South Texas. Can you remind us again what the company does?
Certainly. Lucas Energy is primarily an oil producer in Texas. We control about 15,000 acres in an area called the Austin Chalk Trend. It's to the southeast of San Antonio, Texas, about 45 miles. We have primarily in Gonzales County and 3 surrounding counties, about 44 to 45 producing wells. In addition to that, we have about 45 total wells, of which 25 are producing.
Well, you know, Bill, I've always liked your business model of opening up wells and projects that have been previously abandoned by other operators. Tell us about that.
Yes, our business plan is centered on my primary abilities, which are old wells. What we do is we have 3 phases in our business plan. First, go in and find old wells, whether they're plugged, shut in, or producing at very low rates. Acquire the wells at a very minimal price. Second, we go in and try to enhance the production on those wells, either through stimulation or new equipment. And finally, we choose wells that have a lot of mostly horizontal type wells, or wells that the casing is large enough to drill new horizontals out of, and we go in and drill new horizontals.
Now, Bill, how does the company go about locating and then deciding upon the projects that would merit the revamping of those production efforts?
Don, that was our original business plan, was how would we find an area that we thought was good. What we finally settled on is looking for wells or areas that the drilling was done in the 1980s, so that when the 1990s came along and oil went to $10 a barrel, then people just walked off and left the area. They either plugged the wells, or they just left the wells shut in, or they left them producing at low rates. That was the first part of our plan. The second part was to look for well bores that had good casing, and in particular large enough casing that we might drill new laterals out of. The third is to look for some kind of underlying asset, such as the Buddha Formation in this case, that would develop in later years, and we could have some upside to what we were doing.
Now, the company's seen a lot of activity recently, a couple of announcements. One was about increases in production, and the second one was a joint development with a company called Terra Energy. Tell us about that.
Terra Energy is an exploration evaluation company. They are a company that goes in and uses up to the state art type of mechanisms to evaluate the exploration potential. Lucas Energy is not an exploration company. We have some properties that we thought had some exploration potential, but since we're not in the exploration business, what we wanted to do is bring in somebody that could evaluate this for us. Our deal with Terra basically allows us to put the burden of the exploration research on them, and then they will participate for about 30% of the future cost of developing the property. We have another partner that will participate for probably another 30%.
Once again, Lucas Energy, they're listed on the American Stock Exchange, symbol LEI. Our toll-free number for free information anywhere in the world you're watching, 888-259-4449. Now, Bill, recently you announced that Lucas Energy's number of shareholders had increased by something like 400% over the last year. I would have to think that's extremely satisfying to experience that level of support.
Yes, it is, especially because of the down market at this time. I was the original founder of the company and was Chief Operating Officer up until January of 2009. In January of 2009, I took over as the President and Chief Executive Officer and looked at what our status was. We had about 500 shareholders, many of which had large positions and were hedge funds. When the market turned downward, that became a problem. Those people were looking for a stock that they could get out of because it had cash value, and our stock was that. So there was a lot of selling. What we did is I brought in a friend of mine, Mike Brett, who for a long time had known the public market well, got his advice. We went out to various conferences and shows. We got on MoneyTV, did a number of things to increase the amount of shareholders we had. In doing that business plan, we managed to bring the number of shareholders from 500 to just over 2,000. The important thing was that taking out the hedge funds, we now only have 2 shareholders, both of which have restricted stock, that have over 250,000 shares. All of the other shareholders have less than 250,000 shares. So it's very well dispersed.
Now, earlier this month, Bill, you announced that you'd started drilling at what's a rather new project for you, the Austin Chalk lateral well. How are things progressing there?
That well's going very well. We actually started the first part. We're waiting on the drilling rig to move in to do the lateral itself. We've cleaned out the well with a workover rig, which is less costly than the drilling rig. We expect that well to do very well in the chalk. It offsets a well that we already drilled a new lateral in. The offset well made 160 barrels a day without stimulation. We intend to stimulate this well and drill approximately a 4,000-foot lateral, and we have high hopes for this.
Well, Bill, you mentioned presenting at investor conferences. What's the message that you're bringing to people there?
Our message is that we believe our stock is undervalued. Today, the stock is about 80 cents a share. Our book value is a little over $1.60 a share. So we're twice the book value that we are the share price. If you take the book value and substitute in for the book value the reserves that we had calculated as of last March 31st, our year end, and put current price of $70 a barrel into that formula, then you'll see that our value per share is about $5 to $6 per share. And we're hoping that people will see that. That was one of the important things that we wanted them to see, and that we believe that that's what we're trying to tell the public. We are undervalued, and we are a good buy for the future.
On the American Stock Exchange, the symbol's LEI, Lucas Energy. Bill, why is this a good time right now for folks to take a closer look at your company?
Of course, what I mentioned earlier, that we're selling below book value, is important. The other thing is, if you look at where we are in the middle of the hottest, fastest growing trend in the oil business there is, the Eagle Ford trend. If you go to one of the search engines and type in Eagle Ford, Eagle, and a second word Ford, F-O-R-D, you will see that this is the hottest growing trend. There's already been 100 wells drilled in the trend. There's 200 permits out there. Acreage went from, we were paying in our county roughly about $50 an acre when we first started. It's now over $1,000 an acre in some places. And we believe that because of that, we are moving in the right direction, and we're a good buy. We believe that people should pay attention.
Well, of course, the oldest adage in the oil business is the best place to find oil is where oil has already been found. Again, Lucas Energy, LEI. Bill, we're initiating coverage again on your company. Looking forward to more updates over the next 3 months. Thanks so much for joining us on the show.
Thanks, Don. It's great to be on the Money TV again.